Welcome to the Safe Wheel live stream where I share my real P&L on 3 accounts and share my proprietary Safe Wheel options trade system for free. And make sure, sometimes my audio doesn't work well. Type in the chat that you can hear me okay. I just want to make sure that's working. Also, be sure to post any questions you might have so I can get to those before the end of the live stream. And anything about options, if you have any questions about options, or any of the trading systems that I'm trading here. All right, Tron, thank you for letting me know that the audio is working fine. Okay, so first, I'm going to get into the earnings edge. What happened last week with the earnings edge? This is the earnings edge account right here. You can see my net liquidation right here. Can't find that very many other places. Let me see here. I'm going to pull up the spreadsheet here that kind of has the data from the past. Okay, so with the earnings edge, my record's 35, 23, and 9 since I started this. I started in January 2022. And since I made a tweak back in October of 2022, my record's 15, 16, and 6. So basically about a 50-50 win rate, average win 961, average loss 641. And in 2022, you can see I vastly outperformed the S&P 500, 63 versus minus about 20. And then this year, I'm underperforming. What's this number here? This 420. That's not right. What is the SPY? 434. Just call it 435. 435.00. Okay, so the S&P is up 13.75 year to date, and the earnings edge is actually down 9% year to date. But if you look at the total from 2022 till present, up about 48%, where the S&P is actually still down about 8.4%. So since it hit all-time highs in the end of 2021, the S&P is actually down 8.4% still. So it's coming up on 2 years where the S&P has been down. Now, one of the main questions here is, what did I trade last week? Well, there were no stocks that fit through all the filters, so there was no trade last week. And that happens every once in a while. We'll see what happens next week. Actually, we'll see what happens this week. Okay, let's get into, so now you can see, all of my trades, winners, losers, everything like that. Let's get into my next trade, which is the Premier Level 5. The Premier Level 5 here, you can see my account, 36,443. Let's take a look at that. $36,443. Okay, with the Premier Level 5, what's really nice about it is it has about 1/4 the drawdowns with the S&P 500, and that's approximate numbers based on monthly back tests and forward tests, real money tests. So since inception, my record's 23, 7, and 10 break even, so 23 wins, 7 losses. I got 4 open trades right now. You can see what happened. See, I didn't start this. I was developing the trade still in early 2022, so I didn't start it until April 8th. And you can see that from April 8th, I had a 12.2% return where the S&P was down 6. And so far this year, the S&P is up 13.75 and the PL5 is up 8.26. But if you want to do risk-adjusted returns, right, you can actually multiply this number by 4. And you can see that the PL5 is still outperforming the S&P 500 based on risk-adjusted returns. But also, if we look at the overall, you can see that the PL5 is up 21.5%, where the S&P is only up 6.5% since April 8th of 2022. All right. So that is the Premier Level 5. And if you guys have any questions about this, let me know. I trade options on the ES, and I also hold some bonds in there too, as you can see there. All right, so let's get into the safe wheel. What's going on with the safe wheel? Well, let's first look at the P&L, 6622. Let's compare that, see what's going on. 6622, so it's down a little bit, not too much. One of the things with the safe wheel, I went back and extensively looked at all of the back tests since 2017 and the forward tests since 2022, and looked at the monthly returns and went over that. I've been doing that for the last week. And what I found is the drawdowns are about 1/2 the S&P 500. And these, again, approximate numbers based on monthly back and forward tests. So if you run the safe wheel, you're only going to see about half the drawdowns. I know I've mentioned before that your drawdowns are equal to the S&P 500, but I had to redo those numbers. I looked at them from a monthly basis, monthly standpoint. They're only 1/2 the drawdowns. So on a risk-adjusted basis, you could always you could multiply things times 2. So 2022, you can see that the safe wheel did 21.7. The market was down 19.5%, vastly outperformed there. And now in 2023, you can see that the safe wheel is up about close to 9%, and the S&P 500 is up around 14. But again, because your drawdowns are about half on a risk-adjusted basis, you could multiply that times 2, and so it would be outperforming just slightly the safe wheel. But overall, you can see that the safe wheel is up over 32% since inception, with real money traded right here in front of you, live trades, 32%, trading it once a week. And then occasionally on Fridays, I'll go in and roll a $5 call, so you guys don't see that. But that's the only trades that I make. So pretty much you see everything that I do here on Mondays. And then the S&P is down 8.4. So vastly outperforming since the inception of the safe wheel, live being traded right in front of you. And again, you can multiply that times 2. So that's like 60-something% when you get a risk-adjusted return as far as drawdowns. All right, so let's get into what do I do now. So what happened to DKNG? They went into earnings last week. Let's see. So we can get in the chart here. So you can see what happened. After earnings, it popped, significantly popped higher. How did that affect what I'm doing? If you recall, I was long 200 shares last week going in. I sold calls, covered calls against those 200 shares, and they were called away, which was good because I made a bunch of money. Because, for example, one of them I took assignment at around $27.50, and I sold it around, I don't remember, $32 or something like that, $31.50. So, you know, I made that like $300 or $400. So that's really where the money's made in this system, is like when you sell a covered call, but you sell it way far out of the money, and then you get assigned. And that's what happened. So the put hedge obviously did not do well. You know, the put hedge lost money, but overall the long 200 shares did quite well. So looking at what do I do next? Well, I do have this long call, right, that I put on last Friday. I don't really consider this when I'm considering whether I'm going to go into a new stock or start over or what have you. Looking at this, I could possibly continue to keep this put. Let's see, I have 102 days. So if this put is within 70% of the actual price of DKNG, and it's not under 100 days, I can keep this. And in essence, right now, I could start over. So if I wanted to, at this point, I could pick another underlying and start over. But I'm going to stay with DKNG. It's there's no reason to go to a different stock. It fits all the criteria, and it's making money. So even if it wasn't making money, if it fit the criteria, I would have confidence in that it would eventually make money, because this is just a statistical system, a quantitative system. So this is a $30 put within, let's call this 33.84. So 33.84 times 70%. What is that? 33.84 times 0.7, that's 23. Obviously, the put is well within $23. It's at 30. So it's well close enough to the actual price, right? So, and it's not under 100 days. It will be next week. So next week, we know we're going to replace, I know I'm going to replace this put hedge no matter what, because it'll be at the point where it will depreciate too quickly. But it's still good right now. So now I'm just going to run my traditional wheel on top of my two hedges here. And I'm going to go into here. I'm going to run my wheel. I'm going to sell something that expires at the end of the week. I'm going to sell a put. I'm starting over. I want to sell a put that gives me at least like 34 cents. And I can't do 32.50, right? And I want to get as far out of the money as I can. So it looks like the $33 put is where I'm going to go. I'm going to sell one of these. Now, as far as sizing, I have between $5,000 and $10,000. Therefore, I'm going to trade one of these and 3 put hedges. I want to get as much money as I can here. There you go. Shoot for $44. Make sure I'm selling the put. Yes. Work this order. I mean, this is a pretty simple system once you get it down. Okay, so we have a filled order here. So now I'm just going to come in next week, and I'm going to see if I get it, assigned or not. So I have the $33 put. So if this stock goes under $33 on Friday, I'll get assigned. I'll own shares. I'll look to write a covered call. If not, this will expire worthless, and I could sell another put next week. So I'm back into tier 1. I was in tier 2. I had owned 200 shares before. Okay, so let's see if we can get into any of the questions now that I've traded the safe wheel. All right. Tron and Stevo says the audio's working. Great. All right. Jonos, when are you going to start over with a new position given the current circumstances? So I would say that I started over with a new position right now. I could have went to a different underlying right now if I wanted to. But actually next week would have been better because my put hedge would have told me to get out of it. So next week would have been the trigger point to start over, but I could have technically started over right now if I wanted to. Could have sold this thing and started over. Whenever you move this put hedge, whenever it's moved, that's when you can start the trade over, unless you own shares, right? If you own shares, you're still in DKNG, for example. If I was long 100 shares or long 200 shares, I would not be able to get out of it. I mean, I wouldn't, as according to the rules, I would not get out of this trade. I would use DKNG. But right now that I don't own any shares, if my put hedge was taken off, in other words, let's say it was under 100 days and it was time to take it off, whenever I move my put hedge, that's when I would start over. So kind of technically I could have almost started over today, but next week, let's say I don't get assigned and this put hedge is under 100 days and I move it. When I move that, that is a time where that is a time that I am starting over, whether I start over with DKNG or I could start over with another underlying. Okay. I started the course not long ago, and I'd like to see a clear step-by-step instruction to follow from the beginning. You know what you can do? You can go back to my very first live stream, which started in January 2022, and you can see when I started over. We will probably be rolling the put hedge anyway, so it will be the same as starting from scratch. Correct. Correct. It will. Yeah. So when I roll that put hedge, it's starting over. Well, the step-by-step you may miss is his filtering process for picking the stock, but that's made clear from the course anyways. Yep, absolutely. It says, we took a hit last week, but still net positive on the safe wheel. Too bad we couldn't keep 100, couldn't have kept the 100 shares of the stock. Yes, true. We're doing well. I'm not complaining. we're outperforming because when we our risk-adjusted returns are outperforming. John, so filtering process is clear to me, but how to open positions would be great to see. Yeah, sure. Go to the very beginning of my first live streams, and you should be able to see that. Tron says earnings were great. I ended up closing my put hedge after the earnings report. I know it's a risk, but it worked out well. Yeah. I try to stick to very hardcore rules because one of the reasons is I've got to teach this system, so I've got to stick to rules. Like if I can't just go off and make up rules as I go, but you probably did quite well doing that. Getting out of the put hedge a little earlier. Will says still plenty of vol and premium on DKNG. Yes, let's take a look at that. So you can see the vol still up high here, 59, but it kind of drops as we get down into the 47s down here. So we just had that event, so it just goes from 59 to 56, 48, 47, and kind of slowly makes its way down. So it's still kind of coming down off of that event, the vol is. And the vol is a direct correlation to the price of options, the volatility. Less is more. Since we're starting over, shouldn't the put hedge be reset as well and be looking at strikes with 80%? Well, technically, we're really not starting over since our put hedge is not telling us to reset. We aren't over. He just explained the put hedge is still, yeah. I mean, you could start over right now if you wanted to, technically. If you wanted to roll the put hedge, you're going to have to do it next week. But again, I like to stick to the rules because it's easier to teach that way. You got to be strict to the rules. Okay. Minolf. I've been trading CCJ for weeks now. It remains above 37 and I still own 100 shares. Is it still the rule to continue until the 100 shares are sold and then close the position? Yes, I would hold even when the stock might get into the 40s, right? If I'm long, I still hold. If I'm long shares, I go by the rules. Even if the stock price is out of range, I still follow the rules until I'm closed out of my positions. And then let's say that CCJ is $42 when you are out of your positions. Then that means you would not use CCJ when you start over. All right, Tron, let's see. I would stay with DKNG, but there aren't any put hedges with 150 DTE. So I'm selling my 100 shares outright, moving on in both my accounts. I was somewhere around 22% gain on DKNG. So you did quite well with DKNG, and you're going to move on. And you can see here the next put hedge is at 193. I'm hoping that by next week, maybe they'll add another one in here. Who knows what'll happen. I might have to go to the 193, or I guess it would be like the 187 next week. Nice gains, Tron. Yeah, very nice. Very nice. Peter, how did you obtain the high strike price of the put hedge since DKNG has been trading for under 30 for the last 7 months? I think what happened was I had to either roll my put hedge or get out of it and get into a new one. And the $25 strike was it was only $25 strike and a $30 strike available. And the $25 strike did not fall within 80%. And so I was forced to go to the $30 strike. Martin, in one of your videos, you mentioned that this year the income of your business is going to be higher than the one selling options. Is it still like that? Can you expand? Yeah. So my goal, obviously, when you're building a business, you want it to you want to scale it and you want it to go as high as possible. And obviously, my goal would be to make more money with my business than I make trading. So last year and the year before, that did not occur. I made more money trading. This year, 2023, I made more with my business. That's been my goal, so I'm very happy about that. The fact that I've been able to grow my business a lot more and surpass what I make actually trading. I believe that if you were to look at any other instructor on YouTube, that from day one, they make more with their business than they do trading. I mean, day one. I mean, they never had a year where they made more trading than they did with their business ever. I would venture to say that. I don't know for sure, but I'm 99% sure that they never made more trading than they have with their business. I used to, but now I make more with my business. So that's been my goal, and I have accomplished that this year. Some guy missed the start doing EE trades. No, I didn't do any earnings edge trades last week. So if that answers your question. Tyler, my put hedge is at 22.5, looking to roll 17th of May to the 27. Yeah, that sounds, I mean, I'm not going to look at the numbers in detail, but that sounds appropriate. I mean, the 22.5, is that within 80% or within 70%? Depends on where you are in the cycle, so make sure you just follow the flow chart. James, the safe wheel seems very easy to manage and there is no cost for the program. What would you say is the argument for doing the PL5 in the futures with the complications and adjustments and fees? What I would say is that I prefer to have, well, let's look at the spreadsheet. You've got the safe wheel, which has done about 32% over the last 2 years, based on half the drawdowns. And you've got the Premier Level 5, which has 1/4 the drawdowns at 21. So you can multiply this times 4. That's about 80% versus the S&P. And you can multiply this times 2. That's about 60% versus the S&P. So I like the Premier Level 5 best. It's a lot, I just like the 1/4 drawdowns. I feel like it's a lot more stable. I feel like I can scale up more here. It's a lot more predictable, smoother equity curve, a smoother program. I hope that answered your question, James. Charles says it's inspiring to see your success, Carl. Thank you, Charles. I appreciate that. I appreciate that you guys are, you're okay with my business being successful. I mean, that's why you get into business. Tyler, great, thanks. Okay, good. So I did answer your question there. Bill, What is wrong with a put hedge that is much more than 150 DTE? So that's kind of a weighted Vega question. Basically, the closer you are to expiration, the more bang for your buck you get when the stock moves, typically. And that is kind of reflected here in the volatility, which this is interesting how the vol here is lower than it is way out here. But basically what I'm saying is, let's say I was going to compare this put here with the put in the 192, the 193 versus the 102. If the stock goes down, let's say the stock goes down $5, the 102, these options in this expiration cycle are going to move more. They're going to expand and they're going to have more volatility. They're going to have more. It's going to have more impact on that expiration cycle than it does on this expiration cycle. So therefore, the put hedge is actually a little stronger because it has less days until it expires. It has the moves have more of an impact on it. Tron, I know you have the earnings edge, but have you thought or back tested the safe wheel on stocks approaching earnings? I have not. That's an interesting idea. If someone wants to take a look at that and back test it, I'd be interested in the results. VJ, what are your thoughts on zero DTE? Do you have any zero DTE trading strategies? And if so, what is your favorite? So that's interesting. I've been thinking about zero DTE for a while. I have it on my docket to try to go take a look, a little deeper dive into zero DTE and kind of put out a video on it. It's just interesting. My thoughts right now are that it seems like there could be an edge somewhere in there. But why isn't anybody sharing their real P&L? So I'm kind of, I'm conflicted. Like, it seems like these guys, some of them are making money, but I'm not real sure. But I'm like, well, why not share the P&L if they're making money? So it's kind of like I got to do a pretty deep dive. I mean, there might be a statistical edge there, but I'd have to go play around. I've been thinking about it for quite a while. I'd have to really do some deep dives. See, it involves some back testing, and it's just not a small task. What I'd really like to know is who's everyone's favorite. Maybe leave a comment below. Who's their number one zero DTE guy? Someone that I could follow for a little bit and see what their edge is, because there's so many different ways to trade zero DTE, and there's some people that claim that they're profitable, but it's like I'm just going to have to dive in there, because I know if I look at the traditional structures, I don't really see too much of an edge there. But maybe if you make adjustments, you can find an edge. But who is out there that's actually making money doing it? And if they are, I need to follow them specifically and look at their specific trade plan. So there's just a lot. I can't really give. It's kind of like I can only give my opinion on one instructor at a time, kind of thing. When it comes to zero DTE, I mean, that's like a whole. There's so many things you can do with it. Jana said, sorry, I didn't follow. What is the business you're making more money with trading? My online education business, where I have my products, where you can get the safe wheel. If you want the fast track to it, you can pay for it. But that one I give away for free. Then I have the Earnings Edge system that you can purchase. I can teach you how to do that, or the Premier Level 5 that I can teach you. Well, there's a waiting list for both of those. The carts aren't open for those right now. Some guy says, I have no problem with the business side, earning more than the trading side, especially as I can benchmark my trading against what you are doing. No other instructor or course I have taken does that. Right. You guys can see my P&L. James says, He agrees. You've got Ernie over there, and he uses a spreadsheet. I mean, I like Ernie. I think he's a decent guy. I don't see his P&L. I see a spreadsheet. I don't know. You know. Yeah, James has something maybe up with Ernie. Ernie's a nice guy. I like Ernie. I just haven't really dove into his exactly what he's doing in terms of following him. Got David's son. So, but David's son, I don't think sells a program, so he's not technically an instructor. So you can't necessarily take what David's son does and duplicate what he's doing. Or maybe you can. Maybe he has that data. I'm not sure. But because he's not really someone who sells his system, that to me doesn't. I don't take interest. I mean, but maybe he's worth looking at too. I like David a lot. David's a really great guy. David's son. Steve, isn't zero DTE one of those strategies where you can win a high percentage, but when you take a loss, it's huge? Well, that just depends on the trade structure that you put on. If you put on a butterfly, it's the opposite of that. That's some of the stuff that Ernie is doing over there. James, he does analysis on toss, supposedly trades on fidelity, never shows a trade. You're talking about earning. Yeah. Let's see. BJ, also, I've done some really good backtesting using Options Omega. Yes, I like that backtest software for testing zero DTE, as long as you don't need to make adjustments. Yeah, it's pretty solid stuff. I like, that's what I need to do is dive into the zero DTEs. But the problem is you can't make adjustments, and then with these guys that make adjustments, that's a different ball game. But when they make adjustments, are they using black and white rules, or are they just adjusting, making up the rules as they go? Then you get into the subjective aspect of things, and then I know subjective things don't work. Like that's like being directional, and you guys know what I believe about that. So it's just, it kind of does come down to it's not necessarily that zero DTE itself doesn't work, but which instructor has a system, and then can I duplicate that and see if that works, right? So it's just a big sea of fish. Stop losses are pretty key to be successful with zero DTE. See, so some people will apply stop losses, some people won't, and I have to go back into the individual instructor when it comes to zero DTE. I could come out with some general trades that are traditional trade structures, and I can be on, off, zero adjustments. I can back test some things like that, see what they look like the Iron Condor zero DTE. I have done some back tests with that. Kind of interesting. Sometimes the time of day that you do the back test makes a difference, which is kind of weird. For me, that's not really good, consistent data. But yeah, I have played around with it. It's just, how am I going to tackle it, right? In terms of, giving my approach or what my thought process is. Maybe I approach it with the thought of, how am I going to find a way to make money with zero DTE? But I don't want to get in front of the computer every single day, make trades every day. Like, that's not my style, right? Some guy says, going to check out David from Best Stock Strategy on his views on zero DTE. Seems like a solid guy. Yeah, David's son's a very solid guy. He's a hedge fund manager. He's not an educator, and he doesn't have any system. So he might give you a trade plan, but the problem is that he's not going to help you learn that. Like, when you have questions, he's not going to answer them. And then Avery says, I like the idea of zero DTE. Yep. Yeah, it's interesting. There's a lot of things that could, a lot of possibilities there. That's why it's hard for me to do a review on overall on 0DTE. Do you think the edge could ever go away? Which one? For example, if 1 million people all sold the same strike put credit spread and then tried to exit at the same time. Yeah, I mean, that could happen. But I don't think it's going to go away because it's kind of similar to gambling. So is Las Vegas ever going to go away? Are people going to stop gambling? They're not. So no one's going to all jump over to be the house all at the same time. It's just not human psychology. So I don't think the edge will ever go away, and options and the implied volatility versus real volatility ever go away. And because people want to buy options, they want leverage, they want big wins, and they're going to pay for it. And they'll overpay. Most of them don't even know they're overpaying. Mark, I wonder how the poor man's covered call would work with selling 0DTE against a longer term option contract. Well, it sounds like you would end up being directional, right? Because you'd end up being long, let's say, for example, a call that's, say, 30 days old when the other call expires, you would be stuck holding that call. Or if you wanted to get out, you'd be very directional. I think if the market went down, it would take your long call down much further than the depreciation that you would get. And I think that structure would be directional. Go ahead and put it on a risk graph and see what the T+0 line looks like. Martin says 0DTE is full of gamma risk. Yes, so that's why it's hard to make adjustments. So maybe you do hold it till expiration, and it's just a hit or miss kind of thing, kind of a binary event. And Avery says David Jaffe. I'm not sure why. David Jaffe doesn't trade 0DTE. Maybe he will in the future. But he interviewed David's son. He interviewed Ernie also. Yeah. Don't forget about Ernie. Ernie's a good guy. All right. I don't see any further questions. I'll talk slow here because I know that it typically takes about 5 seconds on delay. Okay, so I'm going to go ahead and say this. If the P&L is not real, what else are they trying to conceal? I'll be back next week.